Okay guys, so I'm going to be showing you my S&P 500 chart and what I'm looking at going forward within it. Now, please do remember everything I say in this video is just my own personal opinion. It is not me telling you what to do, so please do your own due diligence. But to go ahead and get started, I cleaned up the charts a lot because I want to make sure that there's no distractions. We know what we're looking at going forward, and then I have some context to explain how I got the current levels, how I'm going to get the potential fifth wave higher when more price action unfolds, what I'm looking at within that as well, and then how I'm sort of managing this. Now, if you guys saw yesterday's video with Mara, I explained to you guys what I'm looking at there, some lower prices, but also what I'm looking at for Bitcoin. Now, within the S&P, as one of the main things I really want to focus on for the rest of this year alongside Bitcoin is the price action, how I can go with it going forward, regardless of a lot of macro environment. There's a lot of tension going on, and none of that is going to be factoring into what I'm talking about. So I'm going to be using the start of this Elliott wave, the 2020 crash. Reason being is that the crash, or the dip we had before that, the one back here, if we were to measure that quite simply with a retracement. Now, all these retracements, like I've been using at the start of this channel, have not changed. I use the same measurements for both extensions and retracements. It is a very big part of the strategy that I focus on. It makes up a big part of it, and it's been working really well. We have a good track record of it. There's no reason to change it. But if we factor in the low to the high, we had a dip breaking below support. It was completely invalidated. It resetted everything. So this 2020 crash was the last time that happened, where it broke below from this swing low to the swing high, broke below it, had a reset ever since then. Now I'm going to go ahead and delete these because it's, again, for context reasons. That will be the start of the first wave. Down here, completing that first wave. Now the dip within that second wave did actually bounce off the 0.5 within this retracement zone. And then go ahead and going forward, the next dip actually broke into it nicely. Nice, a way to start or to validate this ascending support line, allowing the price to go up higher to finish off a third wave. Now, from the first and second wave, if we go ahead and use a extension tool, we're going to find out that, this third wave is still alive. Even though it is within retracement, it has passed a lot of these levels within extensions. There is no reason to be overly, confident when it comes to taking short positions just yet. What we want to see in order for that to happen is we continue from the previous significant swing low, which is this one right here. This when it comes down, what we want to see, and we still have more room to go higher. It can go all the way up to 7783, so 7,783, even 7,800 as an even number as well, if you guys like that. But the thing is that from the swing low, if we follow the price up higher, at any point when it comes down, we want to see it actually break within the supportive area. So from this last low right here, the reason I'm not counting this one is because from the low following the price up higher, the price never broke within the supportive line. Yes, it did bounce off of it, but my trading checklist specifically strictly says that I want to see a fib retracement get broken in aggressively, regardless if the price jumps up and gaps even higher. I am not interested in taking any long positions. I want to see, and I only will take some long swing trades if we actually break below 0.35 and start nearing that 0.5 retracement. At that point, at the 0.5, that's when I'm interested in taking longs, especially on the S&P. I would rather miss out on a rally than to break my trading rules. It's as simple as that. So we still have a little bit more room to go now within this room. So let's just say 7,800 is the top of this range. What I'm looking for right now is either for the price to finally top out and go lower, or it comes down before hitting 7,800, which it doesn't have to. We're already well within the extension zone for a resistance and a target for a nice third wave. The reason being is that if we, understand some value gaps, how that works, right? So on multiple time frames, I'm on the daily candle time frame right now, but there's nice value, especially this value gap down here below this value gap. So I'm going to actually give you guys a little bit of an illustration right here of what I'm looking for, right, in order, and that's going to let me show you guys what I mean by this fourth wave within the purple zone uh 5800 to 6500. So right now, if this value gap tries to get filled, that's below the 0.618 at that point, what I am looking for based on my notes, based on my strict trading rule, is that if these areas are broken, it is not these supportive retracement areas are broken. It does not mean I just take aggressive long positions, because we understand we're on the top range. After I showed you guys that green extension, it shows we are in the more aggressive top range of this third wave. So at that point, if we were much earlier on, like it could have been, for example, if we go to the 2020 crash right here, where it broke below those areas, yeah, it would have been a great opportunity to buy and go up higher. But the equivalent of this dip right here, the bottom of the dip, is going to be very, very similar and exactly pretty much the same to this purple area down here. So here's some illustration on that. I'm actually going to explain it this time instead of repeating myself. But at this point, even though we have a little bit more room to go potentially, what I'm looking for is one of a few things to happen. Now, if we come down, respect around that 0.5, respect the retracement zone, then we can go up higher, allowing us to factor in a extension from that, you know, higher price zone. Now, this is an estimate. But if we factor in the bottom of 0.618, it shows that we can definitely hit the higher portion of that range and just come down lower and finally finish a fourth wave. This fourth wave is very important. I'm going to get into that in a moment. But none of this matters at the moment. We got to wait to see it. We got to wait to see if that plays out. So right now, no long positions on the S&P after breaking into that extension. There's just no reason to be, you know, at least overly leveraged on the long side. So what I'm looking for is a bounce off of this. This is also acting as a measurement for invalidating, you know, this third wave to go up any higher. It has gone up quite a bit. But at this point, right, if we fill in this gap right here, if we hit this line right here, so remember that's within this value gap. If we break below this zone, what that means is that I am looking for a corrective move where we come down, we break below it. Now there's gonna be a lot of fluctuation in this, most likely. But what that can lead to is a lower high potential to finally come down into this zone. If we are able to finally come down into this zone, get closer to this ascending support line. We don't need this one in here anymore either. But if we can finally get closer to this area, or at least break into it, nearing that ascending support line, around 6100, 6200, allowing the fourth wave to complete itself, especially seeing a lower high, you know, this corrective rally leading the price lower. Nice swing lower here, also potentially acting as support, nicely within this supportive retracement area in purple. Then it will lead us to the potential, you know, finish of the fifth wave. Now, before I get into this fifth wave, we need to understand that there is a lot of random macroeconomic news coming out. This can highly affect the way we approach, you know, the S&P 500. Yes, it's an amazing asset. Yes, it's been going up a lot, but as you can see, there's corrective moves that happen within it. Even before the 2020 crash, as you can see, there's that's 2008. But within it, there's a lot of corrective moves where it moves sideways for a little bit, still making lower lows, and it goes up higher, right? So we need to understand, just because there's a lot of optimism right now doesn't mean corrective moves are necessary. If this move looks large, zoom out, and does it actually look like a super large move? No, it looks like a normal corrective move. There's nothing off about this, all right? This isn't like the world is ending kind of like bearish move down. No, this is a corrective move to factor in aggressive moves higher. You know, just like I said, this swing low right here, this dip never filled in a proper retracement. So we got to see that retracement happen eventually, right? We can't just see the price go up higher always. So with that green extension I gave you guys, understanding that we are in or near resistance, what we're looking for is a corrective move lower. Now, there's nothing wrong, and that's what I'll be doing. I'll be looking at long swing positions with 8K plus being the target. If we come down into this area, the moment we break below it, I'm out. I'm stopped out. What I want to see is as we follow the price lower. So this is an example I just gave you guys. The overall idea is that we come down into this area. Now, in order to invalidate the possibility of the lower high, what I want to see is that if that happens where I follow the price lower, following the price lower, if we, instead of finding support within it, SLs will be triggered the moment the lower third boundary line of that retracement gets broken. SLs exit the trade, conserve capital, and then I'm following the price lower. If we end up finding support on this value gap, it's very high probability. This happens a lot of time, at least from my experience. What I'm looking for is for the price to go up, find short-term resistance, and when it comes down, another retracement. We've been doing this for a while. We've just been following it. Where we want. So I'm going to show you guys right now. It's a lot easier if I just show you guys with a drawing tool. We come down, we go up into that first retracement. We end up using the new one as support, factoring in just this move, and then it'll start leading the price to go up and break the swing high and go up higher. At that point, the moment we start seeing the volume change, start to see the RSI respect this being as a fair value opportunity for the price to find support, then we can go ahead and start going up higher. At least that's how I'm managing the position sizing, right? So at this point, if I'm taking any longs within that orange support line I just showed you guys, I'm not going heavy. I'm going very, very light on my position sizing. I am not being aggressive whatsoever with taking these long swing trades. I want to see it prove itself before I add more to it, right? So as of right now, I'm doing a lot of covered calls on Bitcoin, no more than 50% of my IBIT holdings to, increase some income as maybe the price stays flat or as any weakness occurs. So I'm hedging while also trying to bring in some income from that. So far it's been working out really nicely. And then also the rest of the 50%, at least of the opened shares that are not locked into covered calls, that's just accumulating that appreciation. I can start selling that off as we near short-term resistance. I explained that in yesterday's video, but I'm going to be talking about more about that in the future. But as of right now, quite simple. I'm looking for a proper corrective move. So now, at any point, if this tops out and we see that opportunity where the price finds support, lower high, right? And position sizing is key. I am not interested in going to any heavy long swing trades unless we see the price action I explained earlier, where we find support, we go up higher, and we end up finding actually a retracement support within what could be a corrective bullish trap, but it just goes up higher, right? The moment we break to swing high, then that's when I'm looking to add more to that position. So the reason for the SLs, of course, that's to conserve capital, because the idea is that we can come down to around 6K, around 6,200. That's the idea. So now here's the estimate, right? So as this unfolds more, I'll let you guys know exactly what I'm looking at, because right now a lot of things can happen. We're still moving up higher. So I'm just giving you guys a very simple, broad understanding of what I'm trying to do, or at least what I'm looking for, right? So alerts are set. I'm keeping a close eye on it. I'll let you guys know. And I'm going to be back on Discord. I'm going to be really focused on updating you guys a lot more frequently on there. But as of right now, what I'm looking for in order to set up the SIF wave, and this is going to change a lot as the price continues to unfold, but understanding that we are around topping out that third wave according to the green extension I showed you guys earlier, right? We are well within it. We are in the premium range of it. What that allows me to do is start an estimate. So from the start of the first wave, right, all the way up to the estimated finish of the third wave, which is roughly the price that we're at the moment, down to an estimated where the fourth wave can finish at. So I'm going to make that roughly $6,200. Another rally, and this is going to change a lot. This is going to change, but the fifth wave can finally top out around, somewhere between 11.5K to 15K. That's quite a nice stretch higher. It's very doable. At least that's what I'm focusing on. We've done this so many times. It's very realistic in my opinion. But the reason I'm not using the whole move as a larger corrective, move, is because I only like to let the set of waves, let these 1 to 5 waves finish out before I really start looking at a higher move. Now, what that looks like is at the moment, because we haven't actually gone up there, I can start from where the price had the reset all the way up to here where the price is currently. Now, this area that I just drew, this is the, the no-brainer buying opportunity zone, this is where I'm going in heavy, because at that point value is just screaming. Obviously I'm not going to over leverage myself, but this is where it's just a no-brainer buying opportunity. Now, it's not, to me, it's not very likely that the price will come down here soon. We can see much higher prices, so this is going to change a lot going forward as the price continues to unfold. But just understand, we got to finish the third wave, get started on the fourth wave, and have a good idea of where this fourth wave can go. So any, short-term, smaller picture downtrend forming, I can start to remodify where this can go by overlapping it with a bearish extension. So it's as simple as that. As of right now, I'm waiting for this to top out. The moment we start seeing any downtrend form, I can start overlapping bearish extensions, give you guys a better idea on where in here I'm looking at to really start accumulating a little bit more aggressive longs when it comes to the price falling. If the price starts to fall soon, which again, this can happen at any point. And if the price just continues to rally up higher, then I'm just going to follow it higher. I'm going to continue to follow this higher as the price goes up, and then continue to modify the fourth wave until we eventually fill it. And then that's what I'm looking at, taking those long positions. I am only long trading the S&P with swings. I have some other stuff I focus on when it comes to shorter term trades. But the S&P does a really, really good job at sustaining itself, right? So as of right now, with the short term, so this is what it looks like. So I'm going to go ahead and change the color so we can tell the difference. So as of right now, quite simple. This is where I'm looking at opening some small long positions as a swing trade, so more than one day. We have the 120 overlapping nicely with the 0.5. I already said this earlier, but what I'm looking at is for the price to come down here and then go up higher. At any point when the price comes down, I'll be updating you guys with new retracements where I'm looking at potentially reducing or having high caution that the price can form something more like this. This will all unfold where it can, do something like that and then come down into this zone. This is, I'm going to leave this here for now. Actually, I'll delete it because this isn't something that I believe is very probable right now. I believe finding a low somewhere here is a lot more realistic than us breaking actually below this. Breaking below this is what I'm focused on, but that's what I'm focused on at the moment. Now, if instead, I'm gonna leave this here because it's more relevant short term, in the short term. But if we end up coming down to the value gap breaking below this, then the possibility of that lower high is much more likely than if it were to just bounce off right here and we start breaking above the 0.35 back above 7K, then at that point it's more likely, in my opinion, that we will break the swing high and stretch up a little higher, past like 76K, 77K, 78K before we actually start seeing a more reasonable correction. We got to break below this. It becomes a lot more likely. Until then, any support within this where it breaks back out of the yellow, chances are we're gonna very much easily see the swing high get broken and the price goes up higher. Now this can, the moment we break into the yellow, so the moment we actually break the 0.35, that's when I'm looking at some small longs, slightly DCing within the zone. SLs will be at 6,700. Then at that point, I'm looking to see if the price is actually going to respect the short-term resistance. I'll update you guys on later for us to come down here. Ideally, I mean, if we can just fill this area sooner rather than later, it sets up for a much nicer rally, much more predictable, something easier to participate in. But as of right now, just because of my strict trading rules, I'm not going to deviate from the plan I just explained to you guys. That's very similar to the plan I have with Bitcoin that I explained in yesterday's video. More updates on that soon. Same thing with Mara stock. I'm looking for this to fall significantly lower in order for me to take below $5, like around $3. If it ends up going to, I believe I said 15, then I'm looking at some short positions, but no short positions unless we're at 15 or above. And then if we don't reach there, then I'm just waiting for the price to go down to around 3, below 5, in order for me to take some aggressive longs. So as of right now, we're either at or near the third wave top. A little bit of patience is very much important at this time. And then once we come down to this, once we actually confirm that the fourth wave has started, then I'll be able to give you guys a better idea on where I'm looking for this fifth wave to go. Because fifth waves, at least for me, I like to factor in the start of the first wave to the third wave, and then where that fourth wave can potentially bottom at, and then I'll keep modifying it, and then that's where I'm more confident on where the fifth wave can be. So as of right now, I'm sitting back, I'm chilling, reduced S&P 500 position because we're well within the third wave resistance. There's just no reason to, yeah, I mean, it's as simple as that. There's just no reason to over leverage yourself. But then if we do come down here and we actually break back out of it, opening up some small longs, in order for me to want to add more to those longs, and maximize a bit more of the profit for the S&P when it comes to these swing trades, small open, and then add more if and only if we actually start breaking if we fall now, this will be the swing high. So the moment we break over the swing high or wherever it's at the time we actually come into the yellow, then I'm looking to add more with the idea of us going to potentially 77 to 78k like I explained earlier, and then from there this will be modified as well, and I'll keep you guys updated. So yeah, hopefully you enjoyed this video, and I'll catch you guys on the next one.